right, fantastic. Thank you all for being here. It's really great to see you all because we're not actually going to be talking about crypto and price volume action. So you know, all the hype people are probably out of the stage. Are you joining us?
I was hoping for a chair, but I can stand.
No, I'll stand.
I didn't realize the chair was, yeah.
Of course, I've been sitting down there. I'm just quiet.
How could you miss it? Okay, fantastic. Look, let's get started. I think it's going to be an important panel because, you know, we've been over the past decade, a lot of people on this stage have been, you know, trying to pioneer this industry forward. And there's always this kind of question, when is mass adoption going to happen? When are we actually going to be using blockchain technology and not just, let's say, funding it for people to use and subsidizing it, but when are we actually going to get to the real deal and not just the casino? So we only have 30 minutes and we have 5 panelists here, so it's going to be really, really speed. Maybe we just run through it very quickly. Just say your name, what your company does in 1 sentence, and then we get started.
Thank you. My name's Jeremy Britton from Boston Trading. Basically, we make crypto investing or digital asset investing safer and simpler for everybody. We have a little hashtag that's INCFI. Everyone knows TradFi, everyone knows DeFi, but inclusive finance. So teaching men, women, children, all ages, all cultures. We started the world's first crypto mutual fund 10 years ago. Since then, we launched the world's first halal fund for the Muslim community, the world's first kosher fund for the Jewish community, and we also have Sanatana Dharma funds for the Buddhists and the Hindus and the Sikhs. So allowing anybody to invest safely and simply. That's what we do.
Hi, everyone. I'm Clara Tao, founding officer of the Filecoin Foundation. For those that are not familiar, Filecoin is the world's largest decentralized storage network. We are also the earliest project in the space of DePIN, so decentralized physical infrastructure, where if you imagine today, crypto is used for a lot of payments. We really look at crypto for infrastructure use when we can take data centers from all around the world and create a network where people can store files in a decentralized and secure way. So super excited to be here.
Great. Thanks for being here and amazing to be on this panel. My name is Sandro. I'm with the Cardano Foundation. Cardano, it's a so-called third generation public permissionless blockchain. And as our friends here, we are very much focused on the infrastructure stack. So it's not about hype and fun stuff, but it's how can we integrate blockchain in a way that it serves humanity, but also nation states and enterprises. So really try to move the world forward. And as yours, and I would love it to hear, focusing education, focusing on decentralized solution to make our world a bit better. We have seen this year and last year where the big cloud providers had some issues and certain industries stand still. It is a very important topic, and as you will hear over the course of today, it becomes more and more important with the rise of technology such as AI that you have a trusted infrastructure.
Thank you, Sandro. Good afternoon, everyone. Kamil is my name, and I am the president of the board of the Hashkav Association. The Hashkav Association is the leading ecosystem development entity within Hedera ecosystem. Hedera itself is a layer 1 blockchain technology, or DLT, that represents the third generation platform, which combines decentralized aspects with enterprise grade governance. We are also known by the consortium that we have built over the years, which consists of up to 39 S&P 500 organizations, which includes Google, Boeing, Bank Nomura, DBS out of Singapore, and Standard Bank, which is the largest bank in Africa. A project that has been launched and initiated back in 2017 with the goal of filling the niche between, back at the time, public ledgers and private ledgers. So if you guys remember, back in 2016-17, we had 2 categories. We had Hyperledger and Corda for private and closed ecosystems, and we had, back at the time, Bitcoin and Ethereum, which is public and accessible for everyone. And then, as a decision of the leadership team back at the time and the co-founders, we decided to create a public but permissioned ledger, which resulted in Hedera Hashkav. Basically, we are combining the decentralization and transparency of Bitcoin and Ethereum, but at the same time, we address the needs of enterprises and highly regulated institutions that need some sort of governance behind the technology itself. So I'm pleased to be here today with you guys.
Hello, I'm Anders Christiansen. For the last 3 years, I've been working on the Ethereum protocol in a company called Nethermind. I also do private consulting for blockchain, basically anything fintech. So yeah, I have you can say the technical. I also used to work for enterprises, so I have that angle as well.
Great, fantastic. Thank you so much for giving the introductions. Let's kick things off. Maybe Clara, ladies first. You've been working on decentralized storage for quite some time. It's incredibly relevant when we see, some of the cloud operators out there, Google, Amazon, etc. We've seen last year, when there's a small little thing that breaks, it turns off the whole internet. The work that you've been doing is more and more relevant in today's society. What would you say are some of the challenges that you've had and kind of some of that adoption? To a certain extent, it seems almost, too good to be true. Everybody should be moving to decentralized storage. Why haven't they done so yet? What are some of the hurdles that you've seen for enterprise adoption of your technology?
Yeah. Well, I wanted to kick off by those that are not as familiar with crypto adoption today. The theme of the panel is that actually there are more users of crypto, 400 million, than the populations of the United States and Canada combined. So we were actually at a curve in the time in blockchain history where we're seeing massive adoption. 8 out of 10 banks today are trying some kind of blockchain rails. And at least 70% of Fortune 500 companies, they're experimenting in some way. So this no longer is something that people are thinking is just a fad or just a buzzword. People are actively looking at it. For us at the Filecoin Foundation, we're really thinking about how do we make blockchain eventually invisible as a word? Because ultimately, the technology should just work as it's meant to, right? If you have data to store, how do we make it as simple as possible for you to store that data? One of the exciting examples just happening this week, we just announced yesterday with Premier Bert, we are backing up data from the government of Bermuda. And when we think about what public goods means in the blockchain space, we really mean data should be a public asset. Everyone should have resilient access to, that every citizen should access without any downtime. And we talked about earlier the downtime of Cloudflare and all these AWS outages that happened all around the world earlier this year. That happens when you have a single company running a single network with a single point of failure. And for us, we really believe that knowledge and data and critical data as assets are more important than ever. And we're going to see more and more adoption of data. Every day, people can't live with more data. More businesses are running on data. When we think about autonomous vehicles or even robotics, that runs on terabytes of data each machine. People have to store that data somewhere. They also want to make sure that the data isn't necessarily mined and just belonging in the hands of monopoly. So over the last few years, we've been very much accelerating that. The challenge with anyone who's worked in enterprise, I spent a long time at companies like Microsoft between Ballmer and Satya's transition, where we know that enterprise just takes time for adoption. And that's why, it might seem slow in terms of Silicon Valley standards of where blockchain might be in that horizon. I've been in crypto since 2012, 2013, but this is considered pretty standard for the cloud industry for how long it takes to spin up data centers and to really build the right software layer for the usability that most people expect. So you can imagine today you can store stuff from large archival data sets. We've worked with Internet Archive. We've worked with institutions like MIT to back up their open courseware. We've also worked with lots of people who just want another Google Drive alternative where they really have privacy over their data. So
in your opinion, just to double click on that, really in one sentence, do you believe it's just tenancy, just time, or are there other factors that are impeding that adoption? Because it's true, it feels like a lot of time has gone by. So do we just need more time, or do you think there are just a few elements that are lacking?
I think there's
in one sentence.
Well, that's why people are here at Davos. It's not just time, it's also trust and relationships. Most enterprise is actually a relationship game as much as the technology is there. I think the technology is actually there. It's the trust and relationship part, which is why JP Morgan has security all around their building here, right? That active security.
A lot of trust. Cool. Maybe, Anders, we go to yourself here, just going from, let's say, the business commercial standpoint to the tech side. Clara just mentioned that, she wants to remove the word, let's say, blockchain technology from the industry so we don't have to speak about it. I'm not a techie as well, so sometimes, I reunite myself with Clara on that front. But it's true, maybe there are certain things that me as a non-techie I'm unaware of. So, what would you say to maybe, let's say, a non-techie ignorant as myself, that you from the development side of things often say, wait, hold up, it's not just a commercial challenge here. There's a technical side of the equation that you're not taking into consideration.
Right. Well, that's a challenge of pretty much every software. You don't want your end user to know that it's there, basically, right? And certainly blockchain, especially because it's so complicated compared to traditional software, making that user experience seem seamless, and you never ever have to deal with anything in regards to wallets or keys and all this stuff is quite complicated. I think we are slowly getting there, and we see more and more adoption of wallet features for different providers. So I know that quite a few banks are in the process of or already offering wallet services, and I think that trend will just continue. Unfortunately, of course, that also means that we are kind of going backwards from what we kind of intended to do with blockchain. But
and so, just to point fingers in the room here, is it a tech problem? Is it a commercial problem? Is it a trust problem? What would you say is the major problem here?
Well, I think the problem is pretty much fundamental in that if you want to be self-sovereign and in control of your own money, you need to put in the effort, and not that many people want to put in the effort. So you could say it's a human problem, probably.
A human problem. Okay, we'll touch on that in a bit. Sandro, to yourself now. Cardano spent a lot of time in its epochs building up what we could consider trust on chain, through your latest epoch of governance and the likes. You regard yourself, as quite a solid enterprise chain, also for public systems. When you're building that out and you're having conversations with enterprises, what are some important factors that you can say of Cardano that are important for, like, say, non-crypto natives that might not understand it and would like to get involved? Are there some key points that they raise to you?
Yes. So first of all, I think I can really agree with what you have said in the way where we stand today when we move from this crypto to this institutional grade environment. And this then goes to the question, Jaras. It's like when we look into where we are today in the US as an example, I'm not sure who have heard about it, but the SEC granted a non-action letter to the DTC, which is the CSD and the clearinghouse in the US, right? So now what does it mean? They now have kind of a green light to not only tokenize assets, but now we go into the infrastructure stack, because tokenizing is something which is fun. Everyone wants to tokenize assets. But what does it mean if an asset is tokenized? There is a lot of things happening post-trade, asset servicing, and these are things we haven't really thought about in the past. And now we have to understand what do we need to build the right governance model, the right regulatory frameworks for enterprises and nation states to build and deploy on blockchain. Because as you correctly said, this initial dream, let's say like this, that you have self-sovereignty, that works, let's say, in a very limited way, because the human is not built to take on responsibility. Like when I ask, who wants to have instant settlement? Probably everyone wants to have it, right? You want to have it settled right now. But if the question comes, if something fails, who wants to have no one accountable for it? People start to say, "Ooh, no, that's not what I want," right? So this is like a critical differentiation between retail and enterprise grade. And when we look into this, it's about trust and transparency. So an example from last week, what we did is, it's the first time in history where we did on-chain audit. So what we have something which is called Reef, which is a ledger on the blockchain, and we put our financial statement on our blockchain. And our auditor, Grant Thornton, went and they looked at our on-chain financial statement and they made an accreditation of our financial statement based on what's on-chain. So what does that mean? Everyone can now go and see our financial statement, and there is a cryptographic signature of Grant Thornton, which is backed up with the VLEI, that's a virtual legal entity identifier, which applies or complies with international standards. That's the other thing. If I don't have an identifier which is accepted by the industry, I will lose. So it's just because I can do it technically, if no one applies it or is compliant, it doesn't work. And those are the things where we see a lot of traction on the infrastructure stack, where it happens today. And when you think about Wirecard, most of you have heard about it, there are areas where we now start to solve problems and create value with the blockchain in the engine room. So not like we run around, it's on blockchain, but it's as a trust layer in the engine room.
Yeah, no, thank you. And I think to that point, public goods and trust only really work if they're there tomorrow, right? And if you can be like, okay, it's not going to run away. And so I think there's a very inherent purpose behind what you just mentioned. Kamal, to shift to yourself, because Hedera does see itself, as an enterprise-grade blockchain. I mean, how do you work, as you mentioned, with a lot of Fortune 500s? How do you manage this kind of centralized, decentralized debacle when you're having conversations with them, when you're looking at signing in as many agreements as you have with them, and one of the blockchains that is so tight-knit? I mean, how have you navigated that side of the equation?
Yeah, a very good question. Actually, that's what I tried to explain at the beginning. So back in 2016, when Dr. Lehman-Bird wrote his white paper and explained how Hedera Hashgraph is going to be the response or the answer for the enterprise adoption, we spent a lot of days and weeks discussing how can we add value, not only for Hedera ecosystem and Hedera community, but also for the wider Web3 industry in general. And one of the conclusions that I'm proud of that we made back at the time, we said we don't need to be fully decentralized as Bitcoin or as Ethereum, but we don't want to be closed as Corda and Hyperledger. So we need to strike the balance between institutional needs, but also at the same time, we don't want to compromise on the transparency and also on the decentralization. So we said, well, do we need to be decentralized or distributed? And the answer was, it is enough if we are distributed, but we are backed by the most trusted organizations across the world. And then we said, how are we going to approach that? We said, well, let's just agree that we will have 39 nodes geographically distributed, decentralized. Basically, we will have entities that are respected, trusted, and reliable out of the different industries. And they have a huge user base. They have huge trusts from their users. And that's why when you look at the governing council of Hedera, you find top banks, you see top ICT infrastructure providers, you see universities, you see tech providers, and all the way up to asset management companies. And the reason behind it was like, if me as Kamal, or you as Shiraz, or everyone here in the room can trust Google with confidential documents, and you can trust Deutsche Telekom or Swisscom, for example, with your SMS or your private messages, and you can trust Bank Nomura or Digital Bank of Singapore or Standard Bank or Bank Shinhan out of South Korea with your financials, then most likely you are going to trust these entities to manage and verify and validate the transactions on their behalf. So we had to consider so many aspects and different dimensions. Number one, the individuals, the users. They need to have some sort of trust, and they need to trust the entities behind the project and behind the protocol. Number two, we need to think about the environment. We don't want to consume that much energies in solving, let's say, useful or non-useful mathematical puzzles. So we need to be aware and responsive and responsible for the amount of the energy that's being consumed in terms of sustainability. And last but not least, we wanted to address the needs of institutions, because it's not going to help us to have wallets, but we are not connected to the Web2 economy. We are not connected to the banks. We are not connected to legacy systems and Web2 or existing systems in the Web2 economy. So that was the idea. So one of the guiding principles we discussed and we agreed back in 2017 was it has to be enterprise grade. But when we say enterprise grade, doesn't mean it is excluding startups. Enterprise grade means it is fulfilling the requirements for institutions and enterprises, but it still provides flexible access to startups and entrepreneurs. Number two, we said it has to be geographically distributed, and it has to reflect different industry members. We don't want to have a consortium of banks. We don't want to have a consortium of universities. We want to have a mix of different industries and representatives from these industries that are going to be rotating every now and then. And then we said to have a vibrant ecosystem, again, not only for Hedera, but also for the entire Web3 economy, we need to have a mixed approach. We need to apply a bottom-up, basically start from the top with enterprises and governments. That's why we have seen Hedera signing so many agreements and project engagements with sovereign wealth funds, with governmental entities, and also with enterprises to kind of help these enterprises and these governments to speed up their transition from a Web2 organization to a solid Web3 organization. But at the same time, we launched different grant programs to have a bottom-up approach where we engage with pioneers, with entrepreneurs, with startups, so that we can have and establish a vibrant ecosystem. Not only that, we went actually one step further and we started engaging with layer ones. And then we have really strong relationship with Filecoin. We have really strong relationship with Cardano. And we even, for example, have Chainlink as a council member within Hedera Hashgraph to represent, let's say, the Web3 economy. So with other words, in our philosophy, we will only win as a Web3 business if we bring institutions, with startups, with venture capital funds, with governments to work together towards one unified vision.
Fantastic, and it sounds like a real, let's say, ecosystem struggle, but also kind of roping together, also through some other activities that you're involved in as well with Trust Square and the Trust Circle initiatives. Jeremy, I had a few questions for you, but I'm kind of going to go off script a bit, and because let's say you're not necessarily part of this protocol kind of narrative in a way, but you've been involved in the industry for some time, as you mentioned. You've done a lot on the financial side of the industry. I mean, are you going to call bullshit on anything that they're saying? I mean, no offense, but like, what do you have to say? Give your, let's say, perspective around that, because of course, their protocols, they're of course going to say what they have to say. Does the outer world really care about what they're talking about, or from a financial perspective, is it different?
Well, I'm not going to call bullshit on any of these guys because we invest in all of them. We bought some of these projects. We bought Solana, I think, for about 18 cents. We bought Bitcoin when it was a couple of $100. We do our research because all of our guys are from stock backgrounds. Research into the companies, we research into the founders, we really look at what they've done, what projects they've worked on before they even got into blockchain, what successes they've had. Because when you talk to people who are investing into mutual funds, which is 95% of the world invest in stocks through mutual funds, not directly. They do it through the big houses, which is why JP Morgan and BlackRock and Vanguard are so big, is because most people don't want to do it themselves. They're too busy. They've got lives. So people trust us to do the research. We look at them. We find out which are going to be the long haul guys who are still going to be here in 10 years' time. We don't buy any meme coins. We don't buy any of that rubbish. Mass adoption is not going to come because somebody made $1 million on Melania coin and then lost 99% of it. That's not going to attract people to the industry. That's casino. That's lottery. There's no longevity in that. Mass adoption will come through trust, as you said. It'll come through sustainability, reliability, and full transparency. So you've put literally, you put your underwear on the blockchain. You're showing people everything. If you go onto our website right now, you'll see exactly what we're holding, what coins we're invested into. So you'll see Filecoin is there. And if you check it in 2 hours' time, it'll change. Now, anybody who's investing in stock mutual funds, you contact them and ask them, what are you investing into? They won't tell you, it's intellectual property, we can't tell you, trade secret. Bullshit. Like, how can we trust you if we don't know where our money is? So we believe in radical transparency. Everything's fully open, fully all the time, because what's going to get your mum in? As you said before, people use the internet without even knowing it's the internet. I was born in the olden days. There's like 4 people in the room who've used dial-up internet. I can see you. But now you pull out your phone, you call an Uber, you get an Airbnb. You don't realise you're using the internet. You're just using the technology to get a date or get a whatever you like. And I think the blockchain is the same thing. I was in Byron Bay the other day. Byron Bay, there's a Mexican restaurant that's got Visa, MasterCard, Bitcoin Lightning. And I'm like, oh my God, I'm going to get a taco and pay for it on Bitcoin Lightning. And if anybody hasn't used it, it takes a millisecond. It's faster than Visa. I don't know whether the taco guy is reporting that. I don't know whether he's paying taxes. I don't care. I just knew I could use Bitcoin Lightning in a millisecond and I can transfer funds, and it's fully settled because Visa and MasterCard, you don't realise, 6 months later, the person can go, I didn't like that taco. And the vendor has to give the money back. You imagine you're in business, you don't know what your cash flow is for another 6 months. But blockchain is one of those things where mass adoption will come through trust. And when your auntie can use it, when your dumbest cousin can use it, that's when we're going to have mass adoption. That's when the S-curve's up. That's when the price goes up because everybody can buy, regardless of their intellectual level, which country they're in, what technology they're using.
Fantastic. I'm glad you're very supportive of the people on this panel. I am too. If you call bullshit, I didn't know what to say. So I'm glad you didn't call my bluff there. Fantastic. No, look, we're unfortunately getting a bit close to the end of our panel. I wanted to kind of ask one question. I mean, we often talk about adoption, and the purpose of this panel was kind of to understand where we're at with regards to that. What is one thing, in your opinion, that we should stop calling adoption? I mean, you mentioned it, Clara. It's like, oh, maybe we should stop talking less about the tech. Is there something that you see today that a lot of people are very proud of? For example, we used to talk a lot about transaction speed of a blockchain. We don't hear that. It's not so relevant anymore. Are there other things that you believe in the industry that are impeding on our ability to grow, and that we should stop calling adoption today? So, kind of question to the panel. I don't know if anyone.
Yeah, I think the most obvious one is on the policy front. I spent many years in BC, and if you have the wrong policymakers, don't understanding tech, bundling everything together in one basket and saying, I don't think this should happen, I think that's a huge impediment to innovation in general, and no matter what country. And I think policy is definitely one of those bottlenecks where the crypto industry as a whole has been great in helping teach the difference between DeFi versus TradFi versus deep in projects like ourselves. So I think that's one piece.
You want? Okay, good. In my view, to answer that question, adoption will have two dimensions. So number one is the maturity, and the dimension number two is the value creation or the value add. Maturity pretty much towards regulation and legal certainty, because it's not going to help you to have like the top technology platforms or tech solutions, but you are not able to deploy them, or you are not able to tap into the Web 2 economy. And I keep insisting on the Web 2 economy. That's the basis for Web 3. And you look at it like the evolution of internet. So we had Web 1, we have Web 2, we have Web 3. Web 1 was like basically static websites. You just have access to an information. You read, and that's it. Web 2 was more interactive. You could read, write, and kind of, share some value or some communications or some files. Web 3 is about the third level, which is read, write, and co-own or interact. So I said adoption has two dimensions. Maturity, that's pretty much regulation and legal certainty, which are gonna drive the mainstream adoption, basically enterprises and highly regulated institutions. And let's be honest, a bank or an asset manager or a financial institution, they will not touch that business if they don't have the legal certainty. And then if you wanna try to have a meeting with the executives of these enterprises. Your first enemy in that conversation is gonna be the chief risk officer and the chief legal officer. They don't care about the innovation. They care about how to protect their businesses. So the second dimension, as I mentioned, is the value creation. And the value creation, we need to think out of the box. Since we are in the Web3 world, we should not focus that much on just on crypto use cases or decentralized applications. We need to boost and leverage the synergies with other emerging technologies. And what I mean by that is the intersection, or let's say the convergence between AI, blockchain, robotics, IoT, and so on and so forth, where you leverage the decentralized structure of DLTs and blockchains and storage, for example, like Filecoin is providing, and you bring innovative use cases like Cardano is doing, and basically bring in transparency by bringing more application layers on the top of it. But at the same time, we still need to have data. And that's something where you need to integrate IoT. And then IoT generates massive real data. And then you have the cognitive capabilities of AI, where you can facilitate decision making, you can analyze, you can kind of make your life much easier. Now imagine we have a world where we have I call them polyglot systems or polyglot applications. Basically applications that are leveraging capabilities of blockchain, AI, robotics, and so on and so forth. That's, in my view, where we'll see the adoption and we will see the maturity coming together, and that's where we'll really live or we will experience the real meaning and the true meaning of Web3 transition.
Fantastic. Come on, thank you so much for wrapping us up on that note. I think it was beautifully said, risk, cost, and accountability. So thank you so much. Let's give a round of applause. Thank you. Amazing.